So why did markets sell off today? What's up, guys? Luis here, bringing you guys another video. And yeah, we saw SPY sell off by 1.3%. QQQ Nasdaq sold off by 1.5%. But why? I wanted to show you guys the economic data that came out today that explains exactly why. So you can see we had the unemployment rate reported today was 4.4% compared to the forecast of 4.3%. And if you guys are unfamiliar with that, it explains it right here. It says the unemployment rate measures the percentage of the total workforce that is unemployed and actively seeking employment during the previous month. So basically, more people were reporting being unemployed compared to the forecast, which means less people are spending money, and the market is fueled by people spending money. So that's going to pull the market down. We also had the non-farm payrolls come in at negative 92,000 compared to the forecast of 58,000. So that's a huge difference. This measures the change in the number of people employed during the previous month, excluding the farming industry. Job creation is the foremost indicator of consumer spending, which accounts for the majority of economic activity. So yeah, like I said, market sold off today. It's been following this downtrend, respecting the EMA to the downside. And I wanted to show you guys this level that we drew out a few days ago. We drew out this 676 level on SPY. And look at this. It was respected 5 times today. You could have scalped this 5 times perfectly. And I just want to remind you guys why we drew that level. So when we go on the 15-minute here on SPY, you can see on March 2nd, we gapped down right to 676 in pre-market hours. We pushed up next day on the 3rd, gapped down again, and we opened right at 676. So we were already watching that level. On the 5th, pushed down and found support exactly at 676 again. Now today, pre-market hours, break through 676, push up and find perfect resistance 5 times, like I said, on the 676 level. So that's just perfect. That's just textbook. And we also had this 670 level drawn out from a few days ago. And I'll show you guys why we drew that one out. So you can see, like I mentioned, gap down the first time, gap down the next day, and that was the low of the day. You can see we sold off right at the open, found support at 670. So we were already watching that level. We drew that level, and we hadn't touched that level up until today. We pushed down again on the open and found perfect support again at 670. So yeah, just perfect, I guess, analysis on that one. It was basically textbook. We were trading in this range today, but we already knew the levels that we were hoping to trade between, so that was pretty nice. And I also wanted to mention Microsoft, which we've been watching for several months now. But yeah, like I mentioned in a previous video, I think I mentioned it. We've been finding consistent resistance on Microsoft on this top of this channel, support on the bottom of the channel for several months now. All the way dates back to 2021, I believe. Yeah, 2021. Recently, we found support again on the bottom side. And I mean, who's to say if we're going to climb all the way back up, right? But so far, it's been finding pretty strong support. All the Mag 7s are down by a decent bit. I think Microsoft being the one that's down the most, it's down, what, about 30% from all-time highs. And yeah, I mean, is it a good buy right now? I don't know. It's at $400, but when you zoom out a little bit, you can see could come down a bit more. The cheap can always get cheaper, right? So I don't know if I'm gonna buy into it just yet. I think I might wait to see what happens in the coming weeks, especially with what's going on in the Middle East and all of that stuff. I just want to kind of see how it unfolds. But yeah, I also wanted to bring up IGV, which I mentioned in my last video. This tech software ETF had been respecting the 76 level super strong. This is the weekly chart. You can see how many times they respected the 76 level. And we talked about seeing a possible continuation off the bounce. I think we saw it maybe on the second. So even from there, if we caught it on the second, that's 7.5%, about 7%. We would be up on IGV, which is really, really nice. And we also talked about Micron. So I just wanted to follow up on this one as well. We talked about how, we had been seeing some consolidation here in this area. we had a big sell off, and that's kind of what confirmed to me, like I mentioned in the last video, if you guys go back and watch it, how we had some consolidation and then we finally sold off, right? And you can see just today another big sell off, 6%. I think this sell off over here was about 7% on the day. Another big sell off of 6%, and this kind of definitely confirms, we're gonna see a lot more downside on Micron in my opinion. So I mean, it's about 20% off all-time highs, but like I said, cheap can always get cheaper, right? So could come down another 20% if it pulls back to the 200 moving average, could come down even 40%. So I don't know if it's something I want to invest in just yet, but it's worth keeping an eye out, like I said. And we also mentioned Target. So Target's another one that I mentioned in my last video. We talked about how it pushed up on good news, found the high of day at 122.43, and we were watching it for a possible breakout the following morning, and that's exactly what we saw. It didn't continue, but it did make a move to 126, so that was a decent move. I think we were watching it from 122.45, so that was a nice 3% move on that day. So that was pretty nice. And I also wanted to congratulate anybody that's been investing in United States oil. Whoever's been doing that has been making a good chunk of change. So in the last few days, it's just been up 40% the last few days. So like I said, congratulations to whoever's been investing in that. But I wanted to remind you guys, especially the beginners, you might be a little bit late to the party. It's not, I'm not saying it's not going to keep going up, but I want to remind you of the downside risk, right? Just as quickly as it went up 40%, same thing can happen. If news comes out that, the war is over, that there's no more trade issues with oil prices are going to come down, USO is going to come right back down with it. And the last thing you want is to put 100% of your cash at the top and see it come down, 20%, 25%, 30%, and just be left bag holding, right? That's the last thing that you want. That's the last position you want to be in. So I just want to remind you guys, I don't know if right now is the time to be greedy. In my opinion, now is a good time to take profits because a 40% move you're not going to find just anywhere, right? But yeah, I was also watching, Chevron, Oxy. They've been pushing up to the upside as well. Oxy was up 1.78%. I think Chevron was about break even today. Yeah. But in general, the last few weeks, they've also been pushing up significantly. You can see Chevron was up 25% in a little bit longer time frame. I think this was early 2026. Yeah, early 2026. So it's not as quickly as ticker symbol USO, but still massive push on Chevron. And yeah, let me know what you guys are watching. Let me know what ticker symbols you guys are watching. If you have any trade ideas for the next upcoming week, I want to hear what you guys have to say. So drop in the comments what you guys are watching. And I hope you guys learned something new. I hope you guys liked the video. Drop a like, subscribe, and I'll catch you guys next time. Peace.